So, is the dollar's status as the world's preeminent currency under threat? And if the era of dollar dominance were to end, what would be the impact on super savers like you and me? Plus, what alternatives are out there for those who want to diversify their currency portfolio? Hello, super saver. I hope you're having a good week. These are the 3 questions that I'll be answering in today's video. Because in our mind, all this news lately about the dollar collapsing, the death of our currency, may be a bit premature. Let's just say we're not quite yet ready to get out our shovels and dig a dollar grave just yet. As usual, here's our front of video disclaimer. For a detailed disclaimer, please refer to the end of this video. So, let's dive in, dollar fans and skeptics. Despite some apocalyptical headlines that some of you have seen and reached out to us about, the short answer is no. The dollar's status as the world's preeminent currency is not under threat, at least not in the short and medium term in our minds. And who knows about the long term? British economist John Maynard Keynes once said, "In the long run, we're all dead." Let's look at some numbers, as usual, to show you what I mean, because based on the data we went through, there doesn't seem to be much indication that the reign of the dollar as the world's preeminent currency is about to end. Here are the 4 reasons why we think the dollar remains king. 1. The dollar continues to be the world's favorite currency when doing international business. The latest Federal Reserve study on this topic shows that the US dollar accounted for 96% of all export invoicing in the Americas, 74% in the Asia-Pacific region, and 79% in the rest of the world. The only exception was in Europe, where the euro is the primary invoicing currency, given frequent trading between EU partners. But even here, the dollar is used for 23% of all export invoices. 2. 90% of foreign exchange transactions globally have the US dollar as one of the currencies being exchanged, as reported by the Bank for International Settlements, basically the bank of the world's central banks. This makes the dollar the single most traded currency in the foreign exchange market. The dollar is traded so much that if you want to exchange euros against Swiss francs, it can sometimes be cheaper to exchange your euros into US dollars first, and then subsequently those US dollars into Swiss francs, rather than directly exchanging euros into Swiss francs. That is how significant the liquidity and pricing advantage of US dollars is in the foreign exchange market. 3. The dollar remains the world's most important reserve currency by a margin. According to the latest official data by the International Monetary Fund, the US dollar has more than a 58% share of worldwide currency reserves. And 58% is within the broad range of the long-term historical average. The US dollar's percentage share of worldwide currency reserves has fluctuated a bit over time, between a high of 85% in the late 1970s and a low of 45% in the early 1990s. Having said that, a 58% share of worldwide currency reserves means that the US dollar's importance as a reserve currency is far ahead of any other countries. The next largest currency, the euro, made up only about 20% of worldwide currency reserves, and the Chinese yuan came quite a distant 5th at 3%, behind the Japanese yen and the British pound. 4. People still value the dollar and want to buy it. Its exchange rate has held up quite well against other currencies over time. As you can see from this chart from the European Central Bank, over the past 10 years, the dollar has overall strengthened against the euro, with some volatility in between, as is customary for foreign exchange rates. Plus, the dollar has more than held its own against the Chinese yuan in the past decade, perhaps surprisingly to some. So, for those of you who may be a bit new to the currency world, we should caution that the yuan is among the most tightly managed, some would say manipulated currencies in the world. So its exchange rate is to be taken with a grain of salt. Now, when China ended its fixed exchange rate regime from 2005 onwards and started to allow the yuan to have a more or less floating exchange rate, many observers were predicting a permanent and relentless slide of the dollar against the yuan. In fact, it seems every few years there's headlines of a relentless slide of the dollar, similar to the US default headlines that we see every few years. Well, the dollar did fall initially from 8.27 yuan to the dollar at the beginning of 2005 to a low of 6.04 yuan to the dollar in early 2014, as predicted. However, the dollar has since then made up for some lost ground and is currently, at the time of this taping, trading at a respectable 7.11 yuan for $1. Far from a relentless slide, I would say. Which leaves us with the question, what's going on out there? Why is there so much talk about the death of the dollar, even when it's not supported by the data? Well, it seems to us that there are at least 3 factors that, when taken together, contribute to this inaccurate picture about the impending demise of the US dollar. Here's what we mean. 1. The US basically cut Russia off from the US dollar last year. When the Ukraine war started, Russia had currency reserves valued at about $630 billion, the vast majority of it in US dollars. Well, when they invaded Ukraine, the US cut Russia off from these reserves and at the same time made sure that Russia was as good as excluded from the worldwide financial and payment networks in dollars. That's the power of the country who controls the world's preeminent currency. Of course, this didn't exactly ingratiate us with Russia, and since then, they've been touring the globe, trying to find new friends that might be open to establishing alternative currencies or at least trading mechanisms. And they've had some success with bilateral trading agreements. For example, they started trading with China in yuan rather than dollars. But to be quite frank, it's really no big surprise that 2 of our biggest non-best friends in the geopolitical world decided to trade amongst themselves in their own currencies. And it's also no surprise that they chose the yuan rather than the ruble, which our country has essentially blacklisted as a currency. The real surprise is that it never occurred to them to do this sooner. The Russian Prime Minister said he hoped that trade between Russia and China would exceed $200 billion in 2023. Notice how this is quoted in dollars, by the way, at least on the English language website of the semi-official Chinese newspaper Global Times. In any case, if our math is correct, even this optimistic target would only constitute about 0.6% of the approximately $30 trillion of global trade volume the World Trade Organization recorded last year. And by the way, it seems that Russia is talking to quite a few other countries as well about establishing a new currency regime now that the US has backed it into a corner. This includes countries such as India, Brazil, and Saudi Arabia, as well as some less economically prominent nations such as Bangladesh, Bhutan, and the Maldives. I, for one, am not about to trade in any of my US dollars in the foreseeable future for Chinese yuan, Russian rubles, or any of the currencies in the aforementioned countries for that matter. 2. Dominance often breeds resentment, and the US dollar is the dominant global currency. So again, it should come as no surprise that our currency attracts a bit of resentment from some state actors, but also from private citizens as well, both in the US and all over the world. There are enough people out there who don't like the dollar and the US for one reason or another, and they will only be too happy to jump on the bandwagon of declaring the dollar dead. And maybe that's the reason why Russia was testing the waters for establishing a new currency and financial messaging system in the last meeting of the Asian Clearing Union, what some refer to as the de-dollarization meeting of the Asian Clearing Union. These are the 9 countries from the Asian Clearing Union that participated in this de-dollarization meeting. And this meeting was held in Iran's capital, Tehran, by the way, and was also said to have been attended by special guests from Belarus and Afghanistan. And as way of further background, establishing a new currency and financial messaging system for Russia is top of mind because, as we touched upon briefly earlier, of the Ukraine war. As a result of the war, the EU banned 7 leading Russian banks from SWIFT, the existing dominant messaging used by financial institutions to quickly and securely send and receive information, such as money and security transfer instructions. SWIFT, the Society for Worldwide Interbank Financial Telecommunications, processes transactions between 4 billion accounts and 11,000 institutions in more than 200 countries. So in this column, as you've already seen, are the countries that attended the de-dollarization meeting, which was also a meeting to find an alternative to SWIFT. And in this column are the member countries whose central banks oversee SWIFT. It's not difficult to see how such dominance can lead to resentment from those who may not necessarily be the dominant players. So as I mentioned earlier, I'm not trading in any of my US dollars just yet. 3. History shows that no country and currency can dominate the world economy single-handedly forever, and many smart observers and authors of popular books don't get tired of pointing this out. So yes, the global dominance of the US and the dollar will come to an end at some point, as it happened to the UK and the British pound, and many other countries and currencies before. But for the dollar, I think just not yet, not now, and most likely also not tomorrow, in the next year, or in the next decade. We're just not there yet. There's a lot of life left in the dollar as a global currency, as we've just shown you in the data earlier. Speaking about the UK and the British pound though, and how it fell from grace as the world's preeminent currency in the first half of the 20th century, is a great segue to our next question. Well, as any resident in or visitor to the UK can tell you, falling from grace as the world's preeminent currency is not necessarily the end of the currency. The British pound is still around after all. And while the current share of the British pound at about 5% of global currency reserves is just a pale shadow of its once dominant global role, the British pound is still alive and kicking as the currency of the UK. Widely used by millions of people in countless transactions every day, the pound is also freely convertible, both for British tourists and importers who can buy any currency they like with it, as well as for foreign tourists and importers who can buy as many pounds as they need for their purposes. So, what's all the fuss about the dollar potentially losing its status as the world's preeminent currency then? Well, for starters, if the dollar actually fell from grace as the world's dominant currency, it probably would not mean the end of the dollar as a currency per se. Unless some catastrophic event were to happen, the dollar would continue to be used as a means of payment in the US, as well as for value storage and accounting. And in this respect, like for the British pound, not much would immediately change for supersavers. That said, being the world's dominant currency has its advantages, because foreign countries and individuals will want to hold your currency, and there'll be more global demand for it than for a run-of-the-mill national currency. And as the laws of supply and demand dictate, this also means that the US can borrow more money for cheaper than if the dollar wasn't so dominant. Make no mistake, if the dollar were not so dominant, US treasuries would also likely not be considered one of the most liquid and safe fixed income investments in the world. For those of you who are interested, be sure to check out our latest members videos to learn more about how to invest in US treasuries and about fixed income in general. Right. So many economists believe that it's only the status of the dollar that enables our country to run both a large budget deficit and a not insignificant current account deficit at the same time, without completely wrecking the domestic economy. Former French President Giscard called this the dollar's exorbitant privilege already back in 1965, and we have reason to assume he was a bit envious of it. So, if or when the dollar were to lose its global preeminence, for those who prefer the when over the if, here are some developments we could expect. There will be less foreign demand for the dollar as a currency, weakening the dollar's rate of exchange against other currencies. So if you were to visit China or Russia in this faraway time in the future, you would get fewer yuan and rubles for your dollar than you would now. Closely related, there would be less demand for debt denominated in dollars, as we mentioned earlier already, pushing up borrowing costs in dollars in the US domestically as well, for both public and private financings. Presumably not great for the economy overall, but maybe a bit of upside for future generations of supersavers and bond investors. A weaker currency plus higher borrowing rates will probably mean higher inflation rates as well. and no real upside here for anyone. If we look at the history of the British pound again, we see that yes, it's still around and widely used. But also, yes, it has been weakening against the dollar and most other currencies for that matter, ever since it finally lost its preeminent status after World War II. The pound looks almost like a perfect textbook case of what happens to a currency when it falls off the throne. And that's before we mention the occasional currency and balance of trade crises that the UK has experienced in between. So basically, nothing really positive would come from us losing the pole position among global currencies. I think US politicians realize this and will do what they can to keep the dollar preeminent for as long as they can, including, for example, by not defaulting on US debt, which for obvious reasons would clearly not be helpful. That said, when it finally happens, most dominant currencies lose their global status gradually, not overnight. It took the dollar about 30 years from the beginning of World War I until the end of World War II, after 1945, to really supplant the British pound as the world's preferred currency. So, there should be plenty of time for us to prepare and take our precautions, which is a perfect transition to our next question. Here's where it gets really, really tricky for dollar skeptics. Much as many have been looking around all over the globe and have even turned one stone or another far out of the beaten path, it seems there's just no credible alternative to the dollar out there in the foreseeable future. Let's start with the two most credible contenders first, the euro and the Chinese yuan. The euro, the common currency of most member states of the European Union, is currently the second most used currency globally for trade and finance, directly behind the dollar. It also holds the second place among reserve currencies at 20% of global currency reserve versus 58% for the dollar in first place. So, the euro would probably be the prime candidate to step up as the new global preferred currency if something happened to the dollar overnight, like if the dollar got hit by the proverbial bus, if that was a thing for currencies. That said, the euro is not really a geostrategic alternative to the dollar. Europe is too tightly allied politically and too tightly integrated economically with the US, meaning we work too closely together for the euro to provide a real alternative to the dollar. Plus, the governance of the euro is complicated and awkward, with no strong Central European Union government and still very fragmented national capital markets that remain partially driven by national egoisms. So no, the euro will most likely never push the dollar from its throne, but it probably will defend its second place as a useful supplement to the dollar for a while. The yuan. So the yuan is China's currency, or more precisely, the yuan is the basic unit, the label on all notes and coins and electronic deposits of the Chinese currency, which is officially called the renminbi, literally, the people's currency. As my Chinese grandfather used to say, sounds a bit like the people's democracies of the old Eastern Bloc and Soviet Union times, doesn't it? And that's really the yuan's or renminbi's biggest problem. It's not a modern open currency like the dollar. It's not freely convertible into other currencies. It's subject to all amounts of capital controls before it can circulate internationally. And last but not least, it's still ultimately the currency of a government that can often act quite autocratically and arbitrarily by our standards, all of which does not really foster the trust the yuan would need to push the dollar from its throne. Now, the yuan may continue to gain in importance as a currency globally, especially for bilateral trade with China. But the way it looks now, no, it won't dethrone the dollar. Rather, it'll stay in its shadow for the foreseeable future. So, if neither the euro nor the yuan, our two most credible contenders, look really likely to replace the dollar for quite a while, what about some more exotic ideas? And thanks to all of you who've reached out with comments, questions, and concerns on some of these. So gold comes up a lot in this context. And yes, gold has always been used and is still being used as a substantial part of many central banks' reserve portfolios. The International Monetary Fund reports that advanced economies hold on average 17% of their reserves in gold, and emerging economies about 7%, with the US being the largest holder, owning about 23% of the world gold reserves at the end of 2021, ahead of Germany with 9%. This role of gold as a reserve store of value will probably not go away, and Russia, for one, may put more of its reserves into gold going forward, if it manages to rebuild them. However, gold probably will never become the world's favorite means of paying for either international trade and finance or everyday transactions. I was briefly tempted to conduct a small experiment by asking my local gym if they would take a heavy gold coin for the next several months' membership fee. But the possibility of having to find a new gym or being escorted to the police station for suspicious payment activities crossed my mind. So let's just say it remained a thought experiment. But you see what I mean. Gold is simply too cumbersome and expensive to move around. So no, we do not think that gold will replace the dollar as the dominant means of global finance and payments, although it will probably stay around in a more circumscribed role for reserves and private savings, as it has been doing for centuries or even millennia. A basket of currencies as a global anchor. That's another idea that's been thrown around, but no one knows how this would work in practice or how you can make a payment in a basket of currencies. Plus, however you approach it, the dollar would probably still be the largest component of any global currency basket. So no, the basket of currencies idea does not look plausible or feasible either. Cryptocurrency. As my 9-year-old son said, and this is from a few years back, I wouldn't touch that with a 10-foot pole. Well, it seems the Securities and Exchange Commission, the SEC, feels similarly about major crypto exchange Binance now that my 9-year-old felt about crypto then. And Binance isn't the only crypto player under the SEC scrutiny. Just last week, the SEC charged Coinbase, another leading crypto exchange, for operating as an unregistered securities exchange, broker, and clearinghouse. In our opinion, crypto was never really a strong contender to replace the dollar. This one, I never even thought about asking my local gym about. And it's looking less and less likely with the recent SEC lawsuits against leading crypto players and the lack of clarity over crypto's classification as an unregistered security. So, I'll close this US dollar deep dive with a final thought. While the dollar had a good last 10 years and looks safe as the world's preeminent currency overall for the foreseeable future, you never really know for sure. And there certainly are risks and threats out there. And that's why private savers all over the world, especially high net worth and ultra high net worth individuals and families, typically do allocate a part of their overall investments across a set of currencies. Not necessarily because they fear the impending collapse of the dollar, but more to have a bit of diversification, which can make a lot of sense once your portfolio reaches a certain size. And if you want to diversify your private portfolio only, you don't need a geostrategic alternative to the dollar. You just need a credible currency that you can put part of your investments in. The Swiss franc, for example, has been one perennial favorite for such currency diversification for private portfolios. And so have gold, other precious metals and commodities, and in some cases, something as simple as an international index fund. But portfolio diversification in this manner is a topic for yet another video, or series of videos for that matter. If this is something you're interested in, do drop me a comment below and let me know. All right, Super Savers. So for us, for now, the dollar remains king. The US has once again not defaulted, and we're still laddering T-bills. As always, I hope you enjoyed this video and learned something new. For those of you who want to take a deeper dive into our latest members-only videos on fixed income investing, check out our channel page or the joint link in the video description below for more details. And if you're a Super Saver member already, make sure to check out the webinar and Q&A I did last week on bond ladders. The link is posted in the community section of our member zone. See you again very soon with more brand new wealth building content for your financial journey.